Welcome to Mind Over Markets. If you're watching this, you're probably on a trading journey, chasing dreams of financial freedom, or maybe just trying to make sense of the markets. Today I want to share a story about dreams, expectations, and the hard truths of trading. It's not about scaring you. It's about helping you pause, reflect, and find a path that lasts. Let's dive in. Picture this. A trader starts with $1,000, dreaming of earning $100 or $200 a day. Sounds modest, right? But that's 10 to 20% daily profit. If you kept that up, your account would double in a week, multiply 30-fold in a month. Sounds like a miracle, doesn't it? But here's the catch. The market isn't a miracle machine. It's a seed you nurture, and expecting too much, too soon, can burn it all down. I once knew a friend who dreamed of living off trading. I asked, "How much capital do you have?" He said, $3,000. I asked, "How much do you need monthly to live?" He said, $3,000, if I'm frugal. I paused and asked, "Do you think you can double your account every month?" He looked flustered, but said, "Maybe if I work hard and stay focused." I didn't say more because I once believed the same thing. I get it. We come to trading with big dreams, believing effort will be rewarded, like studying for an exam or working overtime at a job. But trading doesn't care about your late nights or perfect chart analysis. It rewards discipline, risk management, and sticking to a plan. And here's the truth. It never pays consistently. Some months, you're in the flow. Others, you can't find a single clear trade, or the market swings so wildly, you're torn between holding on or cutting losses. Think of your trading account like a small garden. You can plant 10 seeds, but you can't expect a full basket every day. Push too hard, overtrade, take big risks, ignore stop losses, and your soil depletes, your plants die, and you lose everything. That's what happens when you expect too much from small capital. You over-leverage, chase trades, and ignore warning signals, hoping for a miracle. But one sharp market move can wipe you out. Let me tell you about another trader. He wasn't a beginner. He'd studied for over a year, taken courses, practiced on demo accounts. When he started with real money, $5,000, he was confident. "I'm ready," he said. "It's time to get serious." But then he shared his goal, $8,000 a month. I was stunned. With $5,000 in capital, you're aiming for $8,000 monthly. He nodded. If I focus, get a bit lucky, and the market cooperates. Sound familiar? Have you ever thought, if I catch the right wave, try harder, time it better, it'll work out? He started well, splitting positions, managing risk, using indicators like RSI and ATR to gauge the market. But by day 10, he'd only made $200. His goal of $8,000 meant he needed $260 daily. The pressure hit. He started trading bigger, combining positions into one risky trade, pushing stop losses farther out, then ditching them entirely, saying, "I can manage it. It'll turn around." Have you ever told yourself that if you just wait, the market will reverse? Then it happened. One afternoon, gold prices crashed, wiping out over $2,000. He was devastated. "I checked the indicators," he said. "They weren't wrong, but the market doesn't care about your indicators. It follows its own rules. Traders don't lose because they predict wrong. They lose because they don't cut losses when they're wrong." Desperate to recover, he traded more, jumping in on weak signals driven by regret. By month's end, his $5,000 was down to $1,500. I asked him, "What do you think now about your $8,000 goal?" He sighed. Maybe I expected too much. He wasn't foolish. He just fell into the trap so many traders do, trying to harvest fruit out of season. So, I ask you, how much capital do you have? What are you expecting? Does it exceed your account's limits? Are you trading to recover losses or cover expenses? Be honest. Trading welcomes big dreams, but if the cost is recklessness or wiping out in weeks, is it worth it? Now, let me tell you about Dave. He's not the flashiest trader I've met, but he's a survivor. At a small event, he shared his 3-year journey. "I've never made $5,000 in a month," he said, "and I've never blown my account." Some frowned, thinking, "What's so special about that?" But I listened closely. Dave started with $3,000 and never aimed for the stars. He asked, "If I risk 2% per trade, $60, how much can I make?" With a 2-to-1 risk-reward ratio, he targeted $120 per winning trade. 2 trades a week meant $200 to $250 weekly, or $800 to $1,000 monthly. Small? Yes. But after 11 months, his account grew to $10,000. He wasn't rich, but he survived. In a world obsessed with shortcuts, isn't the slow, steady path the rare one? Compare that to Rachel. She studied endlessly, bought courses, and felt ready. With $2,000, she aimed to earn $2,000 monthly to quit her job. I asked, "Why that number?" She said, "I think I can double my account." I replied, "That's $100 a day. With a $20 stop loss, you'd need 5 winning trades daily, every day, for a month. Can you do that?" She didn't answer. Weeks later, she messaged me, "I'm down to $500. Have you been there?" Setting a goal without calculating the risks, picking a number because it sounds good. Trading isn't like a desk job where effort equals reward. It's a game of probabilities where today's win doesn't guarantee tomorrow's. If you force yourself to hit daily targets, $100, $200, $500, you're fighting the market's nature. You risk becoming a gambler, not a trader. Look at Dave and Rachel. One chose small, steady goals and survived. The other chased freedom too fast and lost her way. Who would you rather be? Someone who doubles their account in a month only to lose it the next, or someone who grows slowly, steadily, for years? Trading doesn't need you to be superhuman, it needs honesty. Professional funds celebrate 10 to 15% yearly returns. If you're aiming for 10% monthly, 120% yearly, are you setting yourself up for failure? Ask yourself, are my expectations realistic? Are they based on my skill, experience, and capital? Am I willing to adjust, even if it feels modest? Do I want real profits or just an escape from reality? I'll never forget Steven's call one cloudy afternoon. "I'm not cut out for this," he said, exhausted. He started with $5,000, studied hard, kept a journal, and aimed for $2,000 monthly. Reasonable? Maybe. But after 4 weeks, he made $1,300 and felt like a failure. He doubled his trade sizes to catch up, and his account suffered. I asked, "Did your expectations pull you from stability?" He went silent. I told him, "You don't need to quit. Just aim to survive 12 months, not to be a superhero." Here's the truth. Trading is about surviving long enough to succeed. Imagine you have $5,000, risking 1% per trade, $50. With a 2-to-1 risk-reward ratio, each win is $100. 5 winning trades a month, that's $500, 10%. Small? Maybe. But if you sustain that for 3 months, if not, why expect thousands? Start small, preserve your capital, and let profits compound. That's how you scale to 10,000, 15,000, and beyond. Slow down to see where you're going. As someone once said, if you don't know where you're headed, every road leads you astray. Trading isn't about proving you're the best. It's about lasting. Ask yourself, are my expectations based on data or dreams? Can I survive 6 months without profits? Can I stay disciplined with modest gains? If you're nodding, you're on the right path. You're not alone in this. If this story hits home, hit that like button, share it with someone who needs it, and let's keep this journey going together. In the next video, we'll dive deeper into trading psychology and building a sustainable path. Thank you for stopping to look inward. See you next time.